In this episode of Smart Humans, we talk with Blake Hughes, who's the managing director of Infrahub Compute. And we talk about the world of cloud compute and how you can invest by buying your own servers and getting to rent them out to end clients. He comes from a global perspective, sitting in Spain. He talks about the world of investing from Asia to the US to Europe and Latin America, where the world is headed, and how you can try to make money on this trend of AI and cloud compute. And of course, we finish with his picks for 3 years out.
Welcome to Smart Humans with Slava Rubin, presented by Vincent. In this alt investing podcast, Slava talks to amazing minds about their investment journey and finds out what it takes to make it in the markets. And now, here's your host and smart human, Slava Rubin.
Hello, and welcome to the latest episode of Smart Humans. I am super excited for today's guest. We're going to be talking about a whole new asset and a whole new way to invest. So Blake Hughes, who's managing director of Infrahub Compute, welcome to Smart Humans.
Thank you. Nice to be here.
Absolutely. So we always like to start in the beginning. How did you even get into the world of alternative investments? Go back as far as you'd like, whether it's childhood, grade school, your first job, college, whatever it is. Take us back to wherever you'd like.
Yeah, okay. So I started working with a company called Asda in the UK. It's actually owned by Walmart, so I'm sure you know who that is, being over in the States. Spent more than a decade with them, sort of working my way up through the ranks. And I suppose you could say the demands of shift work and the daily routine of like a traditional 9 to 5 role really did begin to take its toll. I needed a greater challenge, probably more fulfillment as well in what I was actually doing. And it was at that point I sort of transitioned into what we're sort of talking about today, which is the alternative world. So we're talking back in what would be now 2008. I've been involved in numerous product promotions, so individual savings accounts, pensions, the property market, unique collectibles, which is quite fun, like rare wines, whiskies, even classic cars at one point. I think one of the best cars I actually sold to an investor was an SS Jag 100, if you're into cars. Very, very nice motor.
How much was that?
$300,000 would be the equivalent of what we sold it for in sterling.
Nice.
So, yeah, very, very nice car. I suppose that the easiest way to sort of understand out of all of that history is that it all proved to be a lot more stimulating and rewarding, 100% more than sort of the repetitive cycle of the retail world I was previously in. I moved into raising funds for exciting new startups, specifically within the UK, with a company called Bure Valley Group. Raised over £80 million, so that's sterling, for what we'd classify as revolutionary concepts that were improving the world within tech. Some examples would be Tribune. They designed a new invention within the logistics, basically driving down, and still is to this day, globally, fuel usage and emissions in 40-foot articulated lorries across the globe. A cybersecurity firm called GBMS Tech, that protected consumers from data attacks used by lots and lots of companies, predominantly within the SME arena. Renewable energy firms. There was one called Store Electric, quite unique. It was delivering energy using salt caverns of all things. And then where it sort of comes to fruition today is that we came across a cloud computing platform called Kudo Ventures. And their concept was very interesting at the time, specifically then. Not necessarily today. It wouldn't be classified as revolutionary today, but it certainly was back then. Because they were using computer power that sat in data centers idle to power their platform or power their business. We absolutely love the idea. As a group, we raised over 3 million to get them or help them grow and establish themselves today in this space. I think the last count they were downloaded in hundreds of different countries, hundreds of thousands of users, and also contracted out with the likes of AMD, so Advanced Micro Devices, and also Sony PlayStation, so some big names on sort of their books. During that sort of time frame as well, we had the emergence of AI, which is obviously exponentially growing today. It's huge and very, very exciting. And sort of looking back now with the connections that we had with tech and also naturally being within that cloud industry at that point, It was a natural progression for sort of us as a business and myself to create our own company in the space. So, in short, rather than raise money for others, we sort of moved into raising funds to promote our own company. This happened just outside of COVID, which was obviously a very, very strange time for all, but it enabled us to build this fantastic company that we're promoting today. NexGen Cloud's got this vision of disrupting hyperscalers, so high-tech cloud hyperscalers. And the reason being that there's a huge viewpoint out in the market, and still today, that the market's basically being monopolized by what we classify as the big tech firms. And we require more options, let's put it that way. There are alternatives being looked at by hundreds of thousands of different companies to actually get involved in this space for more cost-effective solutions and better availability. So I suppose in simple terms, if you require today access to artificial intelligence or workloads and require GPUs, I don't know if you know what that is, but it's a graphics processing unit or a microchip. The world is in short supply. And what's happening is currently whatever is being sort of manufactured by the likes of NVIDIA in terms of infrastructure, generally the top firms take all of the supply. They're in the race to build the next big thing, so to speak. And we're there to supply an alternative service to everybody else within the SME market. 5 years now on, it's a $45 million value business. We've just gone through Series A, about to now promote to go to Series B. And the vision here is to basically achieve an IPO within the near to distant future. LSE or NASDAQ, not necessarily sort of appeal to either at the moment, if that makes sense. So we're not necessarily chosen one yet. LSE makes sense for us because it's London Stock Exchange. We're a European or UK entity. NASDAQ clearly has some seriously good numbers involved, so we could go either way. And NASDAQ obviously promotes cloud. But based on the future sort of forecasts, there could be a unicorn on the cards, which would be amazing for everyone involved. And thereafter, sort of where I come in, my company is called Infrahub Compute, as mentioned. And our job is to simply supply that computer capacity to help build out NexGen to achieve its goal. So in summary, I suppose the best analogy here, if you think of the gold rush, all the way back then, it wasn't the people striking gold that made the most money. It was actually the businesses selling the picks and shovels. And I suppose AI cloud is the gold rush of our time. And my business, Infrahub, is selling the picks and shovels to help that happen.
Awesome. So we'll dive into Infrahub in just a second, a bit more. Before we go there, you mentioned collectibles, classic cars. We'd love to know how our guests here invest their own money. So the classic way to invest is 60% into the public markets, 40% into bonds, 0% into alternatives. Obviously, you're running an alternative investment company, so I doubt you're 0% on alternatives. How do you mix across the public markets, bonds, and alternatives if you had a percentage up to 100?
Yeah, so I mean, that's a great question. I mean, when it comes to, I suppose, looking at alternative categories and what I would invest into or what I do invest into and what to avoid. So been working in this sector now for 17 years. So still going strong, hopefully. Personally, I prefer real assets. So obviously infrastructure with the background that I work in, but you don't have to just include high-powered computers. You've got renewable energy, data centers, a huge opportunity there, I personally believe, across the globe. Real estate is good, but not your typical property purchase. So things like logistics hubs, student housing, healthcare facilities, I quite like that. Even farmland and timberland is becoming quite attractive at the moment. Another, stable choice to keep an eye on is private markets like equity. But predominantly for me, I prefer businesses in the growth stage or the buyout phase, much more appealing. Venture capital, obviously, is always sort of a standard choice, but we're sort of including early stage innovation there, particularly in AI again. But
So
biotech is good and climate is also interesting.
For you personally, though, what percentage is public markets and bonds and what percentage would be alternatives?
I mean, me personally, I'm all on the private alternatives.
So of 100% and will be into these private alternatives?
Probably 70-30 split on average. Private.
And 30 is public markets and bonds?
Yeah, you still obviously have to have a bit of diversification, but from my background, that's definitely more heavy weighted towards private.
Awesome. And then the 70% alts, imagine that was blown up to be 100%. What are the big chunks? Is it the real estate and the renewables energy stuff that you were mentioning? Or what are the big
Yes,
chunks?
so mainly my main chunk personally is assets, hard assets. So not just necessarily the infrastructure that we sort of sell, because I obviously bought assets within our own business, but definitely around renewable energy and the data center piece as well.
And do you invest into crypto at all?
I have done in the past. I think with crypto, it becomes a little bit volatile, and NFTs as well. Whilst they're appealing, it's not necessarily my thing, let's say. But there's certainly been some seriously good wins in the past.
And then for you personally, you mentioned collectibles. Are you investing at all into those, whether it's cars, watches, wines, whiskeys, etc., or more just, taking advantage of them for fun?
Yeah, I mean the latter. I mean I do own some investments in whiskies. It's quite interesting to be involved within that. I did have wine. I've now sold that on. But in terms of classic cars, I'm not necessarily in that market now in terms of purchase, but I was working there in terms of offering other people the ability to get involved.
Awesome. Is there a specific whiskey that you're proud of that you own or that you like?
Not specifically, I don't like the taste of it. Let's put it that way. I'm not a whiskey drinker. I'm more of a gin drinker. But in terms of my portfolio, I've got a wide variety of multiple different whiskies. It's more about the numbers for me necessarily than the.
Got it. Okay. Awesome. And then in terms of art, are you investing into art at all, or you're staying away from that?
No, not at the moment.
So it sounds for you, you are 70% into those alternatives, but you like a lot of the hard asset stuff, which is mostly real estate and these renewable energy type investments. Is that right?
Yeah, that'd be right.
Okay, great. So then let's talk about, big question here, the market, which is very high level macro perspective. What's the Blake Hughes perspective on the market, whether it's the stock market, the economy, what's going on in the world, what's going on in the US, what's going on with interest rates, inflation, Fed, etc. Obviously, you're actually, with your accent, just for the listeners, you're not actually sitting in the US. Is that correct?
That's correct. I'm based out in Spain.
Okay, perfect. So you give us a quite a global perspective. So would love to hear your thoughts on what's happening in today's market, what's happening in today's economy. Take it wherever you like.
Yeah, brilliant. So, I mean, even though we're based over in Europe, we still like to look at the sort of global perspective. So I think the markets appear to be emerging from the usual quiet summer trading period, as it's called, bracing ourselves now for the typical September. We call it the end of year push. There's plenty of reports out there suggesting the lull sort of ending. And investors are definitely prepared for let's call it renewed risks and sort of activity moving forward, just especially where we're working as well. I mean, we can see lots of activity coming our way. I did read over in the US recently that the Federal Reserve is widely expected to cut their interest rates by around 25 points this month, I believe. And, I mean, that could really offer some needed relief for the equity markets, which is obviously great. But I think there's a cautiously sort of optimistic backdrop at the moment, worlds of growth and easing central banks, but I suppose tempered by what would be policy uncertainty. I think you've got to look beyond the sort of crowded mega caps. That wouldn't be a bad strategy for me. And you're sort of seeking diversification and with equities, again, infrastructure, real assets, and adding on to that private credit. Regional plays are very interesting at the moment, particularly in Asia. I like the look at Asia at the moment. They're offering some very compelling opportunities right now. In my sort of arena, Europe, looking likely to benefit from some fiscal tailwinds. And your side of the water, so the US and Japan, I mean, always remain attractive anyway.
Can you expand on Asia? Why are you finding Asia attractive at the moment?
Again, being a numbers guy, if you start looking into specific companies around Asia, the offers that are coming out of Asia, um, very interesting. It seems like there's an opportunity there for people outside of their own location to get involved and do very, very well. I mean, naturally, you've got to make your own decisions on these things. But for me personally, it does look very, very healthy.
So when you reference Asia, which countries, which markets are you talking about?
Thailand is good at the moment, especially without going too far into too much detail. There's a lot of infrastructure building at the moment in terms of connecting islands. And if you think about tourism, where tourism's huge in, say, Thailand, but if you sort of break it down to the mini islands surrounding it, they don't receive any of that tourism. There's a lot of infrastructure building going on the islands to then build potentially the connections and the bridges across from one island to another, which naturally means the influx of tourism will come in. I think it's a very good play to be looking at maybe properties or infrastructure build out within that arena or area, not arena.
And then how do you actually try to expose yourself to that infrastructure opportunity in Thailand? So what's your investment vehicle, or are you trading on like Thai public markets, or how would you try to invest into that, or how do you invest into that?
Yeah, I mean, there's multiple different ways of doing that. I mean, the first one, the obvious one there, is to buy real estate actually on the island itself, build out, get ready for the influx of the tourism and the people that come in and take access to that.
You're
But
talking,
there's
sorry,
also
you're buying like an actual piece of real estate on an
correct,
island in Thailand physically. Okay, great,
correct,
great.
yeah.
Keep going, keep going.
No problem. And then in terms of actual funding and startups, it's not necessarily startups, but it is in the alternative arena where companies are generally offering the ability to fund out the build out of the infrastructure that's being built to connect those islands. You can go in and take equity within those companies on the basis that they're going to build. You can also buy, obviously, parts of the property build out itself. The sort of the list goes on. But it's more for if listeners are listening in terms of paying an interest into that, simply go and have a look. There's multiple different avenues you can get involved and earn potentially some seriously good returns.
And you're sitting in Europe, and you mentioned European fiscal tailwinds. What do you predict for the coming 12 months for Europe? Answer that however detailed or broad you'd like.
I mean, in terms of Europe itself, I mean, a lot of the, let's say, positive outcome or positive outlook in terms of what we're doing over here does sort of drive heavily through infrastructure, cloud, and what could be an influx of a huge amount of capital and businesses. To sort of explain that in a more detail, so you sort of understand what I'm saying here, is there's a huge conversation going on at the moment, and I wouldn't necessarily just call it a conversation, but it's about sovereignty and secure cloud. It's sort of Europe itself is moving quickly into that position. Now, put simply, if you're a European entity, you'll soon be wanting to either use services within the European borders, or more importantly, especially for us, is move your current workloads from other locations across the globe to a secure and sovereign position near home. I'm sure you've heard of the BBC. I read a BBC recent article explaining that the likes of Google, Microsoft, and AWS provide 70% of Europe's cloud computing infrastructure. Now, that is in reality the scaffolding on which many of these services depend. Now, this is for us clearly a concern with new laws and acts potentially being signed off in the not too sort of distant future. Requests to join up and transition to our business and many of competitors out there is literally happening as we speak. But in reality, if you look at the market as a whole, you sort of understand the influx of capital. So $22 billion spent in the US on cloud infrastructure and cloud services last year, 70 billion in Europe. And if the BBC is reporting that it's 70% of all European workloads sort of happen on a US basis, there seems to be a huge amount of traffic that's going to be coming our way very, very soon. Even the likes of Nvidia, in terms of us gaining growth, profit, etc., are reporting a 1.8 trillion achievement by the end of 2023 in terms of what the AI-powered market could deliver. So the phrase huge doesn't even cut it, so to speak. But yeah, it's buoyant.
Nice. And we always like to try to put our guests here in the hot seat about some predictions. So, what do you predict in terms of, let's call it, the US stock market in the next 12 months, 12 months out? Do you think it's going to be flat, up, or down?
That's a great question. And in terms of having some evidence behind what my answer would be, could be quite limited. But I think rather than predicting specific markets, I think globally the markets are on the up. It seems very, very positive across not necessarily an exponential boom, let's call it, but certainly investment trends are definitely starting to head in the right direction, I think, in all markets.
So, globally, you're quite bullish on the macro.
Yeah, I wouldn't go say bullish. I'd just say that it's. I believe that it is heading north.
Amazing. If you were going to prioritize your dollar between Asia, Europe, Latin America, or the US, how would you stack rank those four in order for the next 12 months?
Again, you put me on the spot here,
I
Slavi.
am.
I suppose in terms of backup, obviously what I've already said, and my sort of outlook here is personally, Asia would be first in terms of what my appetite is. Thereafter, whilst Europe is doing and looking likely to be moving forward healthily, It's still got a long, long way before it catches up with what the US markets can sort of do. So you put US number two, Europe number three.
Latin America after that.
Yeah.
All right. Very interesting. All right. Well, not everybody knows what Infrahub Compute is exactly. Obviously, this is your company. So, can you just give us the background on what exactly it does?
Yeah, so stripping it right back, I mean, we enable customers to purchase hardware. It's typically unavailable to the outside world. We plug that hardware into a dedicated cloud network, and those servers then run AI workloads from end users anywhere in the world and generate a passive income. So if you think of Airbnb for the property world, then this would be like buy to let for AI computes. That's the best way of sort of understanding it. Once the clients come in and buy hardware from us, the manufacturing process takes place with NVIDIA. We ship the equipment to one of our data centers. Installation takes place. There's obviously maintenance involved and operations, but it's all part of a service where they go on a long-term journey with us, maybe 5, 6, 7-year journey with us of passive income. Another good thing is to point out that the servers themselves are hosted in green energy data centers. Within this space, this is key to clearly doing things right. And lastly, our clients receive money or earnings directly into their bank accounts on a monthly basis, which creates obviously that passive income model.
Sorry, when you say clients, you're referring to the investors or the people that are using the service?
Yeah, so when we say investors, I mean, it's not actually an investment, which is why it's quite a niche opportunity. So it's
Okay.
an asset-backed opportunity. It's no different to buying a property, really. We do sort of promote our product or opportunity within the alternative market because it seems to look that way. If that makes sense. The clients or the customers are interested in the purchase, but generally we do speak to a lot of investors who invested in the alternative world. It's almost an alternative to the alternative market. But yeah, they're the owners that receive the income. So anybody who owns the high-powered computer, end users would use it to build out things like maybe even the next movie, Avatar. I'm sure you remember Avatar. That was
Yep.
created by GPUs, created by this equipment. That movie, by the way, specifically took 4 years in the making to create using these microchips. If they hadn't have delivered these GPUs to create that movie using traditional methods, would have took 50 years, so traditional CPUs. And when I say traditional methods, actually actual filmmaking, it was nigh on impossible. So yeah, they're the type of end users that come into our platforms. Those businesses, they can be blue chip companies, SMEs, even the person in their bedroom creating the next big thing, an application on a smartphone. It really is that open and diverse. But yeah, so I suppose that one of the good thing, or I suppose interesting point for me personally, specifically this model. I mean, you literally just asked the question: is it investors? Is it customers? But is that in the alternative space, you usually have a typical profile of client. We don't. So, I mean, we've got from the investment world, so to speak, sophisticated investors, high net worth individuals. We've got various age brackets and purchases made from multiple locations all over the world, including Monaco, Singapore, UK, Australia, obviously over the water in the States as well, and many, many more. But it's not just individuals, it's businesses, so family offices, venture capitalists, various other businesses all really want to take advantage. And the why is very, very simple, really. It's asset backed, it delivers great returns in a market where personally I think choice and excitement seems to be extremely limited at the moment.
So in the real estate world, I could buy a piece of real estate, not live in it, and look to try to get renters. That's asset backed, and I'm trying to get yield off of my end clients, which is the renters. Is this basically the same thing, but it's not real estate? It's cloud compute and the hardware to support cloud compute?
Correct, exactly.
Okay, great. So you're probably one of the best salespeople at the biz, and I could be a potential customer. So let's talk about how that would look. So are you offering this opportunity to the retail segment? Meaning, can I invest as an individual?
You can purchase as an individual, yes, you can.
I can purchase. And I know you're based in Europe. Is this a European only opportunity? Is this the US? Is it global?
It's pretty much global, but I mean, just stripping it back a little bit more for detail purposes. I mean, we have presence in the States, so we have data centers in Texas and in Canada and Montreal. Obviously, AI cloud or cloud specifically, the biggest portion of the world is driven by your part of the world. So definitely we're in there. But our vision is obviously, or our main focus is the European sort of location. So we've got data centers all across Europe, including Norway, Sweden, Belgium, and looking likely to be going into other locations like France and Germany. But Europe and US is where we sort of focus, where we actually offer the ability for businesses to use the computers. But in terms of purchasing, if people want to come in and actually just own the asset and take advantage of the opportunity, apart from the usual sort of red flag locations, I'd call them, we can service anybody in the world.
Awesome. So I'm coming from New York. Is there a minimum purchase price amount, or what's your minimum threshold? Can I put in $500? Do I have to put in 5,000, 50,000, 5 million? What's the minimum entry point?
Yeah, so there's various different price points on depending on what size of computer you want to buy. Obviously, the bigger computer you buy, in theory, the more passive income you're going to earn on a monthly basis. But as it stands right now, the minimum entry sits at $66,000. So that gets you your high-powered computer and so much more, including the service, warranty, and people looking after you for what will be the long-term journey. But that ranges all the way up to clusters of $30 million. So wherever you sort of fit within that range or where you're interested to move forward with and your liquidity, we can sort of help you out.
Great. So let's use a round number, which is 100K US for the sake of this conversation. So let's say I buy into 100K worth of computer. Is that an upfront purchase where I deploy the 100K immediately and then I then have this cloud compute server capability?
Yeah. So unfortunately, these machines, whilst they're sort of golden nuggets and gold dust, as I like to call them, they're not actually yet built. So it's not like something you pull off the shelf. So we have to, making the purchase yourself directly, for example, that enables us to then go to NVIDIA, pay them to start the manufacturing process. And then from then on, there's a whole journey of manufacturing, shipping, building, installation. You're obviously fully kept in the loop along that journey with nice little email updates and phone calls, etc. But in short, you're paying up front for the product. The product takes a short period of time to go through that process and be installed in the data center. And once you're connected, you have access to an online portal to measure your performance of your machine, see how much it's earning, etc. From anywhere in the world. You can literally be on your boat on the seas and you can see that your machine is earning you money.
Right. And to earn money, there needs to be an end client that's using my servers that I bought. So are you the one getting the end client and I don't have to do anything, or do I have to find the end client?
Great question. So that's exactly where NexGen Cloud came in. So NexGen Cloud has the end client. So they have a dedicated platform called Hyperstack, which is like the software as a service layer. Attached to them is thousands of their own clients or end users, as you rightly said. But also we have 45 plus dedicated partners that have their audience. So it's sort of talking hundreds of thousands of end users in all shapes or forms wanting to get access to different pools of infrastructure to deliver workloads or AI job roles. And currently under management, we've got over $110 million worth of that kit. But we just need to keep supplying more power and more capacity because that's what the world needs.
So if today's day zero, I give the 100K, you then get the product manufactured, ready to go, and we want to turn on the green light with the end client. What day, zero plus what? How many days out? 30, 60, 90, 120, 150? How many days out am I going to have a client starting to pay their first dollar?
Yeah, so we sort of aim for less than 15 weeks to get the whole process completed in terms of you up and running and earning. 4 weeks after that will be the first dollar into your bank account based on the performance that happened during that 4 week window. We have been sort of averaging around less than 12 weeks, but we don't want to, we sort of want to under promise, over deliver to anybody who gets involved. It's a great journey to be on.
Great.
Potentially it might sound like a big time or big amount of time, but actually traditionally or averagely as it sits right now, if you were to do this yourself, you're sort of looking 7 months.
Got it. So with my $100,000 of compute that I purchased after in month one, what is generically the average as to the revenue I should be making?
Yeah, so I mean, again, that depends on the machine that you particularly buy. So, for example, I suppose the easiest way to understand it, every machine goes on a 5-year financial projection to enable clients to sort of understand the journey they're going to go on for their monthly income. We work around.
Let's say it's that 66K machine. I bought 2 of them.
Yeah, so roughly $2,800 to $2,900 per month per machine on that model.
You said 2,000?
2,800 to 2,900 on average a month.
$2,800 to $2,900 per month per machine. So I put up $66,000 up front, and then I'm bringing back, let's call it 2,800 per month. And over the course of X amount of months, then obviously I've repaid it. I can't do the math there really quick, but what is that, like 25 months or something?
Yeah, roughly around 24. So that's the method we work on.
Got it. So in 2 years, you paid back the machine, but the lifetime of the machine is what, like 5 years?
The actual sort of obsolescence target, according to the video, is around 8 to 10 years. But
Wow.
we generally run a 5 year model based on the appetite within the market. So with the machines that we or the hardware that we deploy, it sort of runs on a 5 year cycle. So an upgrade comes every sort of 4 to 5 years. At that point, it doesn't just stop renting, but there will be a decline because then users will start using the better tech. I mean, it is a depreciating asset. Obviously, it's technology. But yeah, I mean, we've got machines in our data centers right now, 4 or 5 years old, fully renting, still delivering some seriously good returns, which of course are looking likely to move into year 6, year 7, and so on. So potentially, if supply keeps moving further and further away from what the demand is, which is what's happening in the world right now, we could be in a position where clients are owning machines that just run and run and run until they become obsolete, and then of course it's run its turn.
And what year do you predict, like, for example, the 2,800 a month? What year does it go down because of the technology not keeping up? Does it go down in year 3, year 5, year 6, year 7? How does the model work in the way you think about it?
Yeah, so we've done a projection. We do our projections based on sort of the history that we've gone through in the last 4 years. So, I mean, roughly after year one, your sort of numbers or your monthly income's reducing by about 5%. Um, Sorry, not in terms. No, let me correct that. The price per GPU that we charge out drops by 5%.
Okay.
And then year 3 goes to 10%, year 4 goes to 15%, but that's a drop in price. The main thing is occupancy. So if your machine's renting around about 80% occupancy over the course of its lifetime, you're going to generate the numbers that we show. What we are actually seeing is these machines renting way and above that, potentially going out of the 5 year period. So even though we're showing you numbers, financial projections, everything else that's earned is sort of additional benefit, additional profit.
Awesome. Super interesting. And then what are your fees? Like, where is your costs? What are your costs and how are they layered in?
Yeah, brilliant. So easiest way to explain it, we take anywhere up to 10% on the front door for the sale of the asset. That covers our OPEX.
You're talking
The
about
reason why,
the 66K product, for
correct.
example.
Yeah, so
So
that
so
pays
it's like a
office
60K
costs.
product, but you charge 66 for it. Is that right?
Yes.
Okay, great.
Yeah. Now that generally just covers everything we need to run the daily operation. Where we actually deliver our profit is the back end. So every client has a contract, so like service level agreement in terms of what they're going to earn in terms of revenue. So 80% goes to all of our owners of the revenue generated by the machines, and 20% comes to us for the service that we deliver. So it's not just about selling a machine and then the job is done. It's actually in everyone's interest to get those machines rented, because not only our clients earn, but we earn as well.
So, for example, that 2,800 on that 66K machine, the 2,800 for a month, is that it's net of your 20% fee, or the 2,800 you take a 20% fee of that and the rest goes to the purchaser?
The former. So yes, it's what you see is what we've already taken our fees. So
Got it. So potentially the total money in from the end client was, I don't know, like 3,500 or something, and you took out that 20% and it ends up as 2,800 going to the purchaser's bank account.
exactly right.
Okay, great. Awesome. And are there any other fees or things that the listeners should be aware of, or it's those two things, the front end 10% and then the kind of 80-20 split along the way, month by month?
Yeah, so good question. So there's obviously there's power costs to this sort of operation. It's electricity that's going to be powered from the data center into the hardware. We take an average on those particular machines we're talking about. It's $5,500 a year. It sort of averagely works out at. You pay that up front for your first machine. So to get yourself up and running, you pay that along with your 66,000 for the unit price. That then gives you a run rate of 12 months from the moment of connection. At the end of year one, you're then expected to then pay that again. And it's It sort of works out roughly a month and a half or 2 months of earnings across the board, sort of pays for your utility consumption for an entire year. The next 10 months is pure profit
Okay,
or income, let's say.
super helpful. And you mentioned this a little bit before, but can you give us a sense of, you've been around for 4 years, can you give us a sense of scale, how many customers, how much revenue, any sort of numbers you want to share that are be helpful?
In terms of what the market that we're operating in at the moment,
Your actual company, just to give a sense of how much experience you guys have and how long you've been around and how big you guys are.
okay, yeah. So, I mean, as I mentioned before, NexGen Cloud. So, my company, Infrahub Compute, is a trading arm of NexGen Cloud. So, it's a one big group. So, $345 million value business, $110 million plus in assets under management. Month in, month out, a profitable entity, and moving forward to, well, with a view of going for an IPO in 2027.
Nice.
Numbers suggest 2 billion upwards, which would be very, very nice for our shareholders. But if you want to sort of get a broader perspective on sort of who we are and sort of some people that's already done this type of not investment opportunity, but company build out. CoreWeave, which is over in the States, which I'm sure you've heard of. They are literally a company that did very, very similar to what we've done over here in Europe. They did it maybe 16, 18 months ahead of us, let's say, that's on that journey. And if you want to go and look at CoreWeave's numbers, they're phenomenal. So we're liking to keep our feet on the ground. We want to make sure that everybody has an exciting journey, but also a fair journey. So suggesting anything above $1 billion puts us into that unicorn position. That's exactly what we want. But yeah, upside could be phenomenal.
Yeah, the CoreWeave comparison is very interesting. And when I was hearing you talk, I really was thinking about CoreWeave. But I guess the difference is CoreWeave is running its own company, and people can invest as a shareholder, but they can't really participate in getting a piece of the actual servers and then getting the revenues from that specific server. With you guys, it's being a little bit more direct, right? It's not just a shareholder of the entire kind of enterprise, but rather this is my specific server, just like in a large building, this is my specific apartment that I'm renting out and that I'm going to get yield on return on this specific asset that I bought, right?
Yeah, so I mean, but there is. So I'm glad you brought that up. So when we're talking about that the two companies are aligned for obvious reasons, there is still two opportunities there. So for listeners who are interested in, say, the equity side of things, the CoreWeave model, as you just rightly said, that is NexGen. So we do have shareholders. They don't buy into equipment. They literally obtain equity within NexGen Cloud. Just to repeat, that's a company that's got the ambition to go for that IPO, and we're sort of looking around about the 2 to 3 year mark.
Yep.
With Infrahub, that also gives clients the ability who's not necessarily interested in the long-term growth option, and it's the asset-backed passive income being paid monthly. So you've sort of got both doors there for clients to venture through and take a deeper dive.
Super interesting. So, Blake, we love to know how people like you stay smart. What are you reading? What are you watching? What are you listening to? Anything that makes you you that you can share?
Good question. In terms of books, I don't necessarily have as much time as I used to read. I try to get through one book a month. But let's give you my top three. So The Intelligent Investor is a great book. That's by, I believe, Benjamin Graham. It just gives you timeless principles of sort of value investing. You've got The Most Important, I think it was called The Most Important Thing. And that's Howard Marks. It goes into risk management, explains cycles very, very simply and clearly, which is what I like, to simplify things.
I mean,
Yeah. And then there's another one called, I think it's Principles. That's by Ray Dalio. I'm sure it's by Ray. And that just discusses frameworks on markets, economics, and really does help with your decision making. Well, helps me personally with my decision making. In terms of podcasts, I suppose, well, outside of yourself, because obviously we have to give out another three.
Of course.
What's good on podcasts? So the Investors Podcast, that's good, but I think it's promoted by We Study Billionaires. Takes deep dives into strategies of multiple different types of investors. So that's I do like listening to that. Odd Lots, again, industry experts. given their knowledge. And Masters in Business is a good one as well. The guy's called Barry that hosts that. Can't remember his second name, unfortunately, but Masters in Business is the actual title. And that contains, again, various different interviews with investors, policymakers, and economists.
Great. Lots of good content there. And our final question is, we put everybody on the spot, which is, what would you suggest for an investment to make in the public markets, meaning in the stock markets, and one that's not in the stock markets, whether it's crypto or a private asset? You are not allowed to sell your own book, so we want to hear something else. So obviously this is not financial advice, but we would love to hear your 2 picks and why.
Well, I predominantly obviously focus on the private market as it excites me. But if I was to venture into sort of the public sector, I think, without giving a specific name, which I know you want, but I definitely think large cap US equities outside of sort of the mega cap tech group, as it's called, would be a good place to start. Sort of taking a delve and a deeper dive. Mega tech stocks like the Magnificent Seven, as they're sort of known, they have led recent rallies, I believe, but personally, their elevated valuations probably invite caution. That would be my opinion. And instead of, I suppose, I consider broader US equities and solid fundamentals and attractive valuation potential. That's where I'd look. I know you want a specific company, but
either a company or a ticker. I mean, you could say it's large cap US. We would just need to find the right ticker to support that, because we need to track this, because we like to see how everybody does, as opposed to just generic responses. So do you want to say a specific company, or do you want to say large cap non-Mag 7 companies?
Former large cap non-Mag 7.
Okay. Cool. What are you considering large cap? It's above what size?
Over $1 billion.
Oh, okay. And then in regards to your private, what would be your private pick? Meaning not publicly listed.
Well, again, taking ourselves out. So looking at private market, again, predominantly infrastructure, energy for me. And when looking at infrastructure, we're not necessarily just speaking specifically about what I do, but renewable energy sector, grid upgrades, digital 5G infrastructure is a good one to look at. Definitely remains highly favourable due to global policy support and stable cash flow. And for me, I suppose why that matters over the next 3 years, which is obviously very, very important. Infrastructure, as I said before, is anchored by those regulatory tailwinds and critical long-term demand. So, and also private assets may cushion that volatility and offer increased return rates versus the public market. So that's where I'd go.
So infrastructure and energy.
Yeah.
All right. Well, Blake, we covered a lot, from starting at Walmart to then shifting to doing all kinds of different investing and fundraising and helping. You even did the 300K car, which is pretty fascinating. Obviously, you like to focus a lot into the alternative space, 70%, 30% into the public markets and bonds, which I thought is quite aggressive and super interesting. The company that you're building and, leading up, but before we got there, we were talking about the global market, which is awesome that we got that perspective. We don't get a lot of, folks from Europe. You think Asia is super interesting. Specifically, you told us that Thailand could be really cool. You did rank Asia first above the US, and then Europe, and then Latin America, which was fascinating. And of course, with your company, Infrahub Compute, we got to learn how you can buy a $66,000 computer and potentially more, and start to get revenues off of that, where, over time you can really start to make quite the earnings, which is really fascinating. Most people don't even know that's possible. They know they could do that maybe with real estate and try to get rent and get somebody to get, rent yield that they're getting here from an asset back. But here, it's actually a completely different type of home. It's really a computer home that somebody is then renting and using, which is really the age that we live in, which is fascinating. We compared and contrasted a little bit to CoreWeave, especially with your sister company, NexGen Cloud, and then obviously Infrahub Compute. So really fascinating product. I definitely will be checking it out myself. And then you gave us lots of interesting content, from Intelligent Investor all the way to Odd Lots. And of course, we finished with your picks for 3 years out. You were quite vague, which we don't love, but it's okay. You still gave us the picks, which was large cap, non-Mag 7, and then infrastructure and energy. Blake, very much thank you.
Thank you.
Smart Humans with Slava Rubin is a podcast brought to you by the team at Vincent. Any data, text, or other content in this podcast is provided as general market information and not as investment advice. Past performance is not necessarily an indicator of future results. For more information on alternative investing, check out Vincent at www.withvincent.com.